What's up, guys? It's August 22nd, 2025. Had a cool day in the markets. Not very tradable, I mean, unless you caught this breakout, but cool from the market cycle perspective. I didn't trade much today. I just traded the options account. I think I might have bought this bar as moving up. I wanted to get out around here. Well, I'll show you. Bears get short here, bears short up here. You're going to buy back shorts, so they're trapped. I didn't get out here on the first run up. I wanted to get out at a new high. And by the time I got right around here, I checked the options account, 𝐥𝐤𝐤 DTE, and they were already crushed from this pullback. So I'm going to think a little bit about trading 𝐥𝐤𝐤 DTEs over this weekend, because a couple times this week I've had a good entry and then it's just crushed through a pullback. So it might not be worth it. But I do scalp futures. I didn't trade futures today because I can request a payout through Apex, but if I get approved or denied is another question. So we'll see if I can get approved this week, and that'll be kind of fun. If you guys are looking to see how I trade, check out the membership section. I talk about trap traders. Exactly how I did right now is how I trade. Bears got short up here, short down here. They short more up here. This middle line represents their break-even price, so that's where I'm going to set my buy order to get long one tick above. I target the recent high. The reason I like the strategy because it works across different types of what am I saying? It's a leg one, leg two. That's ultimately what we're doing. We're trading leg one, leg twos. And you can trade leg one, leg twos in many different ways. So here I'm looking for, this is a swing I actually took. I was a little bit hasty with my entry and I bought around here. Stop right down here. So this line's my stop. And I'm going for 1 to 2R, maybe 3R, depending on how quick 2R is reached. So bears get short down here. They're trapped. This is the swing. Limit order bears are trying to get short. They're trapped. Market rallies. They short more up here. Look at this entry. If I have two EMAs here. This is the 9 EMA and 30 EMA. Full disclosure, I did not come up with a 9 EMA and 30 EMA idea myself. I saw it from someone else and I applied kind of my own blah blah to it. And yeah, so breakout, pullback, and now I'm looking for 1R, 2R, and hopefully 3R. Very similar to what I'm already doing, which is why I like it. He uses the 930 EMA as entries, and so I don't know if he or she took this trade, but they would have entered right here. Very close to where I would have entered on my 50% pullback. So I got some room to play. I'm still working out the details on this. The reason I'm showing you guys this is because I want to show you, I'm trying to explain that this is a good system. It is fractal. It works across multiple markets and different time frames because it's about trap traders. There's 3 types of traders. There's trap traders, there's front running traders, and there's traders looking for a second leg, or traders who want to press their position. So bears get short down here. They're the trap traders. Market rallies against them. Some bulls buy down here, they buy up here, maybe buy the pullback, or maybe they even buy the breakout bar. And then once they start to see that the market's working in their favor, they wait right around here. Bears short here, they short here. This is their break-even price. All these bulls are going to add to their position. Those are the front-running traders. They front-run the breakout. The second type of traders are the trap traders, and the third type of traders are us, the traders who understand this dynamic, looking for leg one, pullback, leg two. So if that interests you, learning more on how I'm doing it live, check out the membership section. If not, subscribing is just as fine because that's all I talk about. That's how I do these breakdowns, is around trap traders. Oh man, it's Friday and I gotta work soon. I've been applying to different jobs. I'm tired of it. I like working nights because I'm not trading, so I'm just trying to build up futures accounts, prop firm accounts, and I want to get into Forex. So the more money I have come in, the faster I can go to Italy and drink some wine. So check out the previous breakdowns. I've been talking about this leg one, leg two move right here. Look, there it is again. This is the weekly chart. This is the daily chart. You can see bears get short down here. They short up here. Look what there's. This week's bar rally to their break-even price. Bears get out break-even. They buy back shorts. On the weekly chart, their target's going to be the previous high. Same thing same thing on the daily chart. The previous high right here. More zoomed in. Bears are shorting this bar here, looking for a collapse. Instead, the market rallies against them, trapping them. They short here and look at the break-even price. It starts to bounce and boom, we get that bull bar. Very nice. This is my favorite type of trade, where there's tails into my entry and then it targets, my take profit gets hit pretty quick. So I just showed you guys 5 minute, a different stock, which is a little more nuanced, and then the weekly and daily time frame on how this setup works is why I love it. You have to understand fractal price action a little bit, and we can go into that in the Discord, or just drop a comment. I'll talk about that on Monday. Gap up, bar one's a bear bar. Bears see this and hoping for a failed breakout right around the swing high from yesterday or the previous day, except they get trapped. Bars 2 and 3 and 4. Nice bull bars start a rally. Bulls that buy this to understand that this gap was a breakout, first pullback, and then it had continuation. If you were daring, you could take this trade. I didn't take it because this was a news. Powell was talking, and that caused a big reaction and breakout bar. Bears short here, bears short up here. They buy back shorts. Same time they're buying back shorts. The second leg traders looking to add to position. Breakout traders looking to add to their position. Boom, we get bar 7, big breakout bar with follow through 8 and 9. You could say this resets the breakout. Bears get short down here. They're going to short more up here. And 50% actually never gets targeted. That's why in the beginning of the video I went from 11 to here, because this 50% never got targeted. Maybe we pull back there, who knows. But at this moment in time, all the bears that short down here are still trapped unless they piled on up here. So nice breakout, big gap with follow through. And then we get a nice 2 to 3 leg rally. So I talked about how I like today because of the market cycle. Leg 1, pullback, 2, new high, pullback, leg 3, pullback, leg 4, new high. But look, this leg 4 is really a trading range, well, even this is a leg. This whole thing is a leg in a trading range. We go sideways, bears start to make money, so now we know we're officially in a trading range. Oh man, I gotta make that systematic video about filtered trading ranges and things like that. That's important. I don't know when I'm gonna get to it, but that is, I'm gonna write it down right now. Actually, give me 2 seconds. I have a notepad that I write down all these things: system, filters, idea, YouTube, video. Okay, I'll clean that up later. So breakout, pullback, we get that high probability second leg, starts at 11, ends around, well, this could be the whole signal. I would always target one tick right above the swing high to be a completed second leg, but the second leg usually goes on for a little bit more. So here's rally, bear short here, bear short up here. In this trade, technically you would never get stopped out, it would just go sideways. Your stop's going to be down here, target's up here, and it just meanders. So yeah, kind of a slow day. I think this breakout this breakout happened fast and it moved far. So then following the market cycle, we're in a trading range for the rest of the day. 2 to 3 legs up, and we have fractal legs going on here. So again, leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. And even the leg 4 had 2 legs. So leg 1, pull back, leg 2. Bears that short of the 21 low, gonna short right around here to get out break even. And look, there's your second leg again. It's not necessarily a second leg I would take because of the context. We're in a 4th leg, and 2 bars later the market would have stopped you out. So if you're taking that, you gotta be very quick. But what's important is that the dynamic for second legs exists, so it's there. You could take it. You could take a lot of these actually. I wouldn't take it unless it has 2 bars in a row, but here it is again. The bull channel starts, bull channel starts from the low 17. That's where bears were getting short, hoping for a reversal. Rallies to the high of 18, pulls back, fills you, and your target's met on 19. So very lucrative setup. You just gotta understand the market conditions. We can understand the market conditions through the market cycle. So now we're in the market. We're in a trading range because bears are making money from 26 to 30. This is a trade I would have liked to take 3 bars down. I would have probably put my stop up here, but had the same entry because I don't like getting stopped. I don't like skunk stops. So this is the trade I would take where my entry's here, but I would put my stop up here. 3 bars down, bear spike, bulls that buy up here, buy more lower. This represents their break-even price. The 29 fills you, and then 31 was that? Or no, 31 fills you, 32 and 33 hit your target, and then boom, bounce off the EMA. Leg 1, pull back leg 2, pull back leg 3. Training range is like to test breakout points, and you can build a system around that. I kind of have one. I'm not running it because I haven't. It doesn't. I just like training. I like training 50% pullbacks, honestly. But the system would be, see bar 13, or excuse me, bar 12. Bar 12 makes 1R very quickly. The bulls who bought this made 1R, and then look right here. So if you could acknowledge we're in a training range, maybe you buy right above bar 12 again, and then you make the same 1R. So there's your training range leg 1, pull back 2. Yeah, there's many ways to do this, and then we're in a training range. This is not a trade I would take because we're going against the momentum, but look, the bears that shorted 26 made 1R, not that quickly, but you could put a sell order here, and when the market returned right around here, your target would be hit. I'm not a fan of this one. I like the buy above 12 more, but just to show you that there are different ways to catch leg 2s depending on the market cycle. My next system that I need to build, I've said like 1,000 videos in a row, is going to be a breakout system. It'd be cool to build an indicator and scalpable. I'll talk about that later. Pretty much I want to build an indicator that shows a gap, then it has follow through, and then I don't want it to paint that. I want it to paint the first reversal bar. So like this is a good example. So 7, 8, 9, 10. It paints 10. And then I go for 1-to-1. So I buy the close of 10. I just buy it with a market order. My stop is down here. My target's the recent swing. And that's it. That's done for that day. That's the breakout leg 1, leg 2. And then I go into the channel phase, and then I go into the training range phase of a leg 1, leg 2. So there's a lot of things that we can do once we focus on a few aspects. Market cycle will take you very far, and leg 2s will take you very far. That's my opinion, and it's been doing me well this year. I built systems on it, a system with it last year in Systems Academy, and now it's really starting to sit well with me. All right, so we have 3-4 bear legs down, and then we have a nice rally here. Looks like it can get a second leg, but this trade wouldn't stop you out, but you'd sit through some nasty drawdown with not enough time in the day to hit your target. Bears short down here, bears short up here, you get filled here. But remember, in a training range, bears are gonna try and target recent lows, and bears start to make money. It doesn't really rally. You do have time. You have about 45 minutes to get out with a point or small loss. So yeah, if you were to take this trade, maybe you missed this, maybe you have a buy the close on a good breakout, then you could scalp right here, scalp that second leg down, take the trading range, trade here. You can take that. There's a lot of trades today. It's just being able to focus on one thing. So the market rallies, bears get short. This trade ends up kind of being a break even, because I don't know if that's up to the trader where they get out. Or you could take a pretty bad loss here on 74, and then it rallies back to your target entry. And then we could do it again for the bulls. Bulls are buying up here. They're buying up here. They're getting trapped. The bulls that bought the high of 52, they buy high 51. And we know that because there's a tail. They buy more at the low here. They would get out break even. Leg 2 on 54. Bulls that bought the high of 53, 54. Get out break even. Look. Market fills them, sells off 56, 57, 58. This is a very lucrative trade, guys. If you want to know more about it, please message me. Just message me on Discord and we can talk about some stuff. Anyways, I guess I'll just we have one more leg to go. I have to get ready for work, so I was going a little bit faster. Bulls are going to be buying the EMA, and we can see that through 61. There's a tail here. They're buying 62, tail here. They're getting trapped. Then look at the pullback. Let's do it like that. So bulls buy around here. They buy more lower. They get out break even on this green line. And 78 did offer a scalp, and you could get out break even on 77. So the leg 1, leg 2 worked today. Today was a tough day. If I did trade futures, I couldn't tell you. I wouldn't have taken any of these trades. I wouldn't have taken this trade. The only trade I really would have taken would be this trade here. And I most likely would have ended up at a small win, like a small point or two, or small loss. I would have seen the rally and maybe get out here, or maybe get out right around here, because that's 3 bars in a row. So from trading one system, yeah, slow day. but from trading all the systems with a leg 2 perspective, it was busy. But let's say in a perfect world, we trade all the systems and we avoid this one because of pal speaking. I just want to see. So we buy the first bar. Okay, that's a winner. We see these 2 bars here. We're looking to get in. We don't get filled. Do it again. Oh wow, we actually do get filled. So bears get short here. Bear short up here. Break even on 17. Target hit on 18, 19-ish. I personally probably wouldn't take anything up here, but just so we can see how many potential trades we had around leg 2s, let's just see. So here was another one. Was that the one I talked about earlier? Yeah, short here, short up here, and then bang, target met. Here's that bear leg 2. Target met. Let's see right here. Bulls that buy the high of 32. Gonna buy more right around here. Look, I actually did not catch that one. I'm gonna change it just so we can see. So bulls buy the high of 31, thinking that's gonna rally. Instead it sells off. They buy more right around here. We put that, so then we pull the fibs. Our target. So if we pull the fibs quickly from here to here, we're gonna get filled on 35 and exit our target on 36. That's a risky short. We're shorting into support after a big rally, so I don't know if I would take it, but you know that trade was there. Then we have this trade that we talked about where we don't know. That's up to the trader how he or she gets out. Maybe for a few points, a small win, or a small loss. That's up to the individual. Same thing with this trade. That's up to the individual. We don't know. I'm not going to count these ones because I wouldn't take a 1 bar trade. But I do see 3 bars down here. So bulls, I'm going to change this color. Bulls buy the high of 55. They get trapped. They get filled. We get filled on, this is the break-even price. We get filled short here. Targets met around 63. And then what was the last trade? It was right around here, I think, right? So we pulled it. I think we pulled from right there. Bulls are buying here. They're getting trapped. Market sells off, rallies, and then offers a scalp on 78 or a small loss. I want to see something. Yeah, there's another one. I don't know if I would take that one again. So bulls buy up here. They buy more down here. This one you're going to have to be fast because you get filled on 72. It's 1 bar. So there's a good chance we missed this trade. But in a perfect world, let's just count. 1, 2, 3, 4, 5, 6, 7. Is that the same one? Hold on. Okay, you know what? I'm going to delete them as I go. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 7, 8, 9. And a lot of those are winners, some small losers, and but yeah, that's why I think it's really important for us to focus on one thing. We just saw how many trades we extracted out of the market cycle and leg 2s and trap traders. Anyways, guys, you guys have a safe, good weekend. I'm gonna be doing whatever I do. And yeah, you guys have a good one. If you learned something, share, show, don't be a hoe. In parentheses, that's not my quote, that's Andy Frisella's quote. I just really like it, so shout out to Andy Frisella. Check him out. Have a good one, guys. Thank you for your time. Bye.